you're a Social Security recipient who's watched prices rise while your benefits barely budge, you may be wondering, when will something finally go in our favor? The answer might be sooner than expected. With mounting pressure from the costs of living crisis, the Trump administration is putting forward new proposals that aim to provide real relief for working Americans, including those who are retired but still picking up hours to make ends meet. These proposals include eliminating federal income taxes on tips and overtime pay, and even something as unexpected as allowing cryptocurrency to count as a financial asset when applying for a mortgage. That last one may sound futuristic, but it's already being taken seriously by federal housing authorities. So the big question is, will these changes truly help Social Security recipients and older Americans, or are they just another round of empty promises? Before we dive deep, make sure to like this video and subscribe to Social Security Posts, the channel that breaks down important updates for seniors, retirees, and every American who depends on these benefits to survive. Let's get started. Over the past 3 years, Americans, especially those on fixed incomes, have felt the heavy burden of inflation. Grocery prices have climbed higher than we've seen in decades. Gas is no longer affordable for everyday errands. Prescription drugs are eating into monthly checks. And for Social Security recipients who often can't just work more hours, these rising costs feel like a punishment for growing older. Many seniors have returned to work just to survive. From bagging groceries to working as delivery drivers, millions of older Americans are earning a modest income to supplement their Social Security checks. But despite their efforts, the federal tax system continues to take a slice of what little they make. The Trump administration is now acknowledging this gap. The crisis has reached a point where older Americans can no longer afford to be taxed on every extra dollar they earn. In response, they're introducing proposals to eliminate federal income taxes on two major types of income that affect working seniors: tips and overtime pay. But this isn't just about economics. It's about dignity. It's about whether seniors who built this country can live without fear of going broke over groceries or rent. And with new federal moves coming soon, this might be a turning point. Let's talk about something often overlooked: tips. For many Social Security recipients, part-time jobs in restaurants, salons, ride-sharing, and delivery services are a vital way to stay afloat. These jobs often rely heavily on tips, but under current laws, every dollar in tips is taxed, making it harder for seniors to benefit fully from their labor. The Trump administration's new proposal changes that. They want to eliminate federal income taxes on tip-based earnings. And there are two versions of the bill that are currently on the table. The Senate version offers a tax deduction on tips up to $25,000. That's a solid benefit for workers with part-time or seasonal employment. But the House version goes further. It doesn't impose any cap on the amount of tips that can be tax-free. That means if someone earns $30,000 or even $40,000 in tips while still receiving Social Security, they may be able to keep every dollar without losing it to federal taxes. However, both versions include income limitations. Once someone's modified adjusted gross income exceeds $150,000, the benefit begins to phase out. It disappears entirely at $160,000. For the vast majority of seniors working part-time, these thresholds won't be an issue. Imagine earning an extra $10,000 in tips a year, tax-free. That's money you can actually spend on your rent, food, medication, or even save for emergencies. For someone living on less than $2,000 a month from Social Security, that's life-changing. For many Americans, retirement is no longer about relaxation. Rising costs have forced millions of seniors back into the workforce to work full-time. Many others pick up overtime just to stay ahead of bills, but here's the catch: overtime pay is taxed more heavily, and that reduces the actual take-home amount. That's what the Trump administration wants to fix. Under their proposal, federal income taxes on overtime pay would be eliminated. This would apply to both individuals and married couples. Like the tips bill, there are two versions here. The Senate version caps the tax-free benefit at $12,500 for individuals and $25,000 for married couples. The House version does not include a cap, allowing unlimited tax-free overtime earnings. Again, there's a phase out. Income thresholds begin at $150,000, phasing out entirely at $160,000. For many Social Security recipients, even part-time work that includes overtime could now become more financially worthwhile. If you're helping out during the holidays, filling in at your old job, or covering for younger workers, that extra time you give could finally be fully rewarded. More importantly, it changes the conversation. Instead of penalizing older Americans who keep working, this tax break acknowledges their contributions and encourages independence even past retirement age. And now let's switch gears to something that may sound a bit surprising: cryptocurrency. You might not expect crypto to come up in a conversation about Social Security, but stay with us. The Federal Housing Finance Agency, the FHFA, recently directed Fannie Mae and Freddie Mac to begin counting digital assets like Bitcoin as valid assets for federally backed mortgage applications. For the first time, borrowers won't need to convert their crypto to cash before applying for a mortgage. This is significant. Many Americans, including some seniors, have invested in crypto over the past decade. They may not have large bank accounts, but their digital wallets might hold substantial value. Until now, that crypto was seen as speculative, not something banks could consider. But under the new proposal, digital assets held in US regulated centralized exchanges will count. That means platforms like Coinbase or Kraken are eligible, but only if your holdings are verifiable and secure. Why does this matter? Because it could help older Americans who want to downsize, relocate, or even co-sign loans for family, but lack traditional assets. Now, if they've invested wisely, those digital coins can be part of their mortgage applications. Now, if they've invested wisely, those digital coins can be part of their mortgage applications. Of course, there are risks. Crypto is volatile. Bitcoin could be worth $200,000 one day and drop to $60,000 the next. But the FHFA is requiring that proper safeguards be built into any policies to manage this risk. While counting crypto as an asset is exciting, it also opens the door to serious questions. Can the housing market withstand another round of inflated asset-based lending? This is what some financial experts are now warning about. If mortgage approvals start rising based on high crypto values, and then those crypto assets suddenly crash, many borrowers could end up with homes they can't afford. The banks could be left holding the bag, and housing prices could be artificially inflated, leading to a situation much like the 2008 housing crash. To avoid this, the FHFA is requiring Fannie Mae and Freddie Mac to submit risk management proposals. These must account for the volatility of digital assets and include emergency policies in case of market downturns. They're also requiring lenders to only accept crypto held in regulated exchanges to reduce the risk of fraud or theft. The goal isn't to encourage recklessness. It's to recognize how much the financial landscape has changed. Americans, young and old, are investing in crypto. Instead of ignoring it, the government is beginning to adapt. Whether this turns into an opportunity or a disaster will depend on the implementation. But it's clear that the doors to crypto-backed lending have opened, and they won't be closing anytime soon. Throughout all of these proposals, no tax on tips, no tax on overtime, crypto as an asset, there are consistent differences between what the House and Senate are offering. Here's the summary. The House versions tend to be more generous with no caps on income or earnings. The Senate versions offer targeted benefits, but include income limits and caps on deductions. For instance, the House version of the tips bill allows unlimited tax-free tips, while the Senate caps it at $25,000. Same for overtime. House version is equal to no cap. Senate version is equal to capped. So what does this mean for Social Security recipients? It means staying informed. These differences will be negotiated in committee, and typically the Senate version has a higher chance of being passed. It's seen as more fiscally conservative, but if enough public support builds around the more generous House proposals, especially from older Americans and working seniors, there could be a push for greater flexibility. If you're on Social Security, these tax changes could be the first major policy moves in years that actually benefit you directly. Most federal policies talk about seniors, but rarely act in their interest. Eliminating taxes on tips and overtime means more take-home pay. Recognizing crypto as an asset gives you greater leverage in financial decisions. These are changes that acknowledge the real challenges seniors face. We're living longer, we're working later, and the system needs to evolve with us. These proposals are a small but meaningful step in the right direction. So what do you think? Are these proposals bold steps toward real financial relief or just political window dressing? Only time will tell, but one thing's for sure. Social Security recipients and working seniors deserve policies that put more money in their pockets, not more stress on their shoulders. If this video helped break things down for you, please hit that like button and subscribe to Social Security Posts for more updates that impact your life directly. And drop a comment below. Do you believe these changes will help retirees like you? We read every comment and your voice matters. Until next time, take care of yourself and each other.